Okay, hello everyone, it's William DeBoyk here, and I'm going to be doing part two on what is Forex here for pipjunkies.com. So, what we need to try and establish is exactly, well, of course, we're still on the topic of what Forex is. Now, in the last video on what is Forex, we explained, some of the basics. We also mentioned, we gave the example of going on holiday and exchanging your currency. As I say, at a local place. In the UK, it's typically at the post office that a lot of people go to. There's thousands of companies that offer the same kind of thing. But in that sense, you're actually buying the physical currency. Okay, so we need to decide, okay, well, what are we actually trading as far as Forex goes, in the everyday business that we're going to be involved in. Now, we're not physically buying the currency. Okay, now this can be slightly confusing in some cases, but hopefully it shouldn't be too confusing. Now, like I said in the previous example, when you're going on holiday, you're actually physically buying the currency. Okay, you're exchanging your pounds, dollars, whatever it may be, in exchange for another currency, depending on which country it is that you're going to. Now, in the case of this, we're not actually buying anything physical. Okay, we're basically buying. It's hard to explain. I mean, it's kind of the best way most people understand it. The best way that most people like to look at it is if you're comparing it to sort of shares. Okay, so imagine the country has, the amount of shares in terms of the amount of currency it has available, and you're basically just buying a share of that particular currency. So in the example I gave previously, when I said if I was going on holiday to America, I'd obviously be buying US dollars. In terms of Forex, if I want to buy some US dollars, I'm basically buying a share of them dollars. Okay, now with trading, basically what you're doing in them stages is you're buying one currency and at the exact same time selling another. Okay, we mentioned this in the previous example. Now this can be slightly confusing for people as well, but keep it in mind, as I say, even if you're exchanging money at a post office or a bureau de exchange, wherever it may be, you're selling your currency. They're buying your currency off of them, and you're buying their currency off of them. Okay, so you're selling to them and they're selling to you at the same time. So that's exactly the same in Forex when you're actually trading through your broker. Okay, you're buying the particular currency, the dollar in this example, and they're selling you the dollar. Okay, so you're basically buying it. Now, obviously, when you're buying a particular currency, you're basically betting on that currency is going to be going up in value. Okay, you don't want to be buying something that's going to go down in value, otherwise you're going to end up losing money. So you're always buying into a currency that you believe is actually going to go up in value. Now, keeping that in mind, as a general rule of thumb, in fact, this is the actual case. The more money that's put into a particular currency, the more that currency is going to go up in value. So if everyone decides they want to start buying the US dollar, not just yourself, of course, but everyone else, then the dollar is going to go up in value. If everyone decides they want to start selling the dollar and buying something else, then the dollar is going to go down in value. Now, it's also worth keeping in mind that in currencies, everything is traded in pairs, okay, at least with spot Forex, okay? You can trade single currencies on the futures market with Forex, but as I say, we're going to be pretty much devoted to spot Forex on this website. So you're always going to be buying in pairs, okay? So you're going to be buying one thing against the other. And the example I gave, it was the British pound, the Great British Pound against the US dollar. So I'd be selling my pounds and buying dollars if I felt that the dollar was going to go up in value against the pound, and the other way around, I'd be buying pounds and selling dollars if I felt the pound was going to go up in value against the dollar. We'll go into that a little bit more detail later on. But like I said, it's important, first of all, for people to keep in mind, because so many people, when I tell them what I do as a job, they think I'm physically getting, tons of dollars shipped, posted to my house. I'm sending loads of, pound notes to people, and I'm receiving yen, and we're not physically taking anything. Okay, it's all done electronically online. We're not physically taking delivery of that particular currency. No one's sending us coins in the post, no one's sending us notes in the post. We're literally just speculating on the differences in price. That's all we're doing. Okay, so we're not actually physically taking hold of any of the money. Now, one thing as well I thought it would be worthwhile putting on here is the main currencies that people trade. Now, there are many other currencies you can trade here. As you can see on this list, we've only got, 9, is it? Or 8, something like that. But, these are the main currencies people trade. Okay, now one thing you will notice on these charts here is that all the symbols, if you look down the symbol section, you'll see everything there is done in three letters. Okay, so let's just take a look at these, for example. Now, Most of these, although not all of these, do make sense. I mean, some of them. Okay, so US, for example, United States, the D stands for dollar. Okay, so US dollar. If we look at the pound, for example, GBP, Great British Pound. Okay, the Swiss franc, the CH stands for Switzerland, the F stands for franc. Canada, the CA stands for Canada, the D stands for dollar. AUD, the AU stands for Australia, the D stands for dollar. NZ, the NZ stands for New Zealand, the D stands for dollar. Okay, makes perfect sense. Japan, JP stands for Japan, Y stands for yen. Okay, you get the idea. So it's worthwhile keeping that in mind. Now, not all of them make perfect sense for this, but it's still things worth keeping in mind and worth taking a note of. And I would suggest to everyone, without a shadow of a doubt, you need to learn what them symbols mean. Shouldn't take too long. I mean, eventually it will become, second nature. But it's important for people to understand exactly what them symbols mean as far as the currency is concerned. And also nicknames, it's kind of important, sometimes it's not. I mean, it really does depend on any resources you're looking at. For example, if you go onto a website and they start talking about the cable, which represents the pound, if you don't know what the cable means, then you're going to be like, well, what on earth are they talking about? You're not going to know what they're talking about. So it is worthwhile learning the nicknames, but to begin with, it's definitely 100% worthwhile learning the symbols, learning the currency that them symbols represent. And I say nicknames, something that will come in time. I wouldn't say it's completely necessary at the beginning, but it's definitely something for people worthwhile learning eventually. So that pretty much wraps it up for this second part of What is Forex. I believe we're going to have another 2 or 3 videos in regards to this, so keep in touch for them and watch out for them on the website. They'll probably be on the next page. It should be fairly easy to find. So until then, take care, guys, and thank you.